It is one of the scariest times of the year, but possibly exciting too. One have done the hard yards earned its keep, and now the government wants to put an exact monetary number on your effort. It is scary and can quite literally be a nightmare. Even some very human questions arise. Why I need to file tax return? Is I really liable to file tax return? Is there any benefit of filing tax return? How I can get a refund? I received FBR notice, now what? How FBR tracks non-filers? In this short video, we will discuss these questions very much in detail and try to make them simplest as never before. But before moving on to first question, we at KLA Pakistan like to thank your management for providing us such platform. We are really grateful beyond measure for providing us such opportunity. Okay, now let's begin with question number 1. Why I need to file tax return? We know that filing a tax return is not everyone's cup of tea. In fact, last year, 90% Pakistanis would rather like to get a flu show than do their taxes. But doing your taxes is important. Here we tell you why. Because it's our legal and social responsibility. Second point is to avoid penalty. Non-filer attract penalty equal to 0.1% of tax payable for each day. Maximum 50% of tax payable. Number third point is to acquire a number of benefits. We'll discuss them. Number fourth point is to legalize your assets and liabilities, especially savings, through submitting wealth statements. Number fifth point is tax return is one of the prerequisites when applying for visa. Moving back to question number 2, who is liable to file tax return? Number 1, person whose taxable income exceeds 400,000 rupees. Number 2, every person who owns a motor vehicle, 1000 cc. Number 3, every person who owns immovable property, 250 square yard. Number 4, person has obtained national tax number. Number 5, person charged tax in any of the 2 preceding tax years. Okay, moving on to most awaited question. Is there any benefit of filing tax return? Yes, there is something deeply satisfying about receiving a big, fat refund from the FBR. Your employer withholds a big slice of your paycheck each month for federal and state income taxes. And now is your chance to get some of that cash back. Let's discuss some of them. Education. Tax deducted on education fee under Section 236I shall be adjustable against the tax liability of either of the parents or guardian making payment of the fee. Scholarship. Any scholarship granted to a person to meet the cost of the person's education shall be exempt from tax, other than where the scholarship is paid directly or indirectly by an associate. Motor vehicle. Advance tax deducted while paying motor vehicle token tax is 100% adjustable and should reduce your tax liability. Note, in respect of motor cars used for more than 10 years in Pakistan, no advance tax shall be collected after a period of 10 years. Every motor vehicle registering authority of excise and taxation department shall collect advance tax at the time of registration, transfer, sale of a motor vehicle at the rates specified shall be adjustable. Zakat. A person shall be entitled to a deductible allowance for the amount of any zakat paid by the person in a tax year under the Zakat and Ushur Ordinance. Charitable donations. A person shall be entitled to a tax credit in respect of any sum paid through cross-check or any property given by the person in the tax year as a donation to any board of education or any university in Pakistan, established by under a federal or a provincial law, or any educational institution, hospital or relief fund established or run in Pakistan by federal government or a provincial government or a local government, or a non-profit organization. Cash withdrawal from a bank. Withholding tax deducted if the payment for cash withdrawal exceeds 50,000 rupees is adjustable. Advance tax on transactions in bank. Advance tax at the time of sale against cash of any instrument, including demand draft, pay order, CDR, STDR, SDR, RTC, or any other instrument of bearer nature, or on receipt of cash on cancellation of any of these instruments by banking company, non-banking financial institution, exchange company, or any authorized dealer of foreign exchange shall be adjustable. Withholding tax on GCM services. Income tax deducted on prepaid cards and postpaid bills of global system for mobile communications are adjustable. Okay, there is one tip. As you all know, Pakistan Telecommunication Authority (PTA) allow 5 SIMs on one CNIC. We recommend to transfer family member SIMs who do not file their tax return on your CNIC. Telephone. Advance tax deducted at the specified rates on the use of PTCL shall be adjustable against tax liability. Similarly, Internet. Advance tax deducted on Internet bill of a subscriber and prepaid cards for Internet is also adjustable. Insurance and investment in shares. A resident person other than a company shall be entitled to a tax credit either point 1 in respect of the cost of acquiring in the year new shares offered by public company or shares acquired from Commission of Pakistan, or point number 2 in respect of any life insurance premium paid on a policy to a life insurance company registered by the SECP. Point number 3. Investment made on open-ended funds offer tax credit, example Mizan Mutual Fund. As per Section 62 of Income Tax Ordinance 2001, an investor can claim tax credit up to 1500,000 or 20% of an individual taxable income, whichever is lower. No tax credit will be allowed if an individual deriving income which is not chargeable to tax. If an individual is a non-resident during the tax year. If one already claimed 1500,000 or 20% of individual taxable income, whichever is lower, on your mutual fund, no further tax credit is allowed for insurance premium, vice versa. Tax credit shall be computed according to formula. Amount of tax assessed before allowance of any tax credit divided by a person's taxable income. Multiply by total contribution or premium paid by the person or 20% of the taxable income or 1.5 million rupees, whichever is lower. Pensioner fund. An individual Pakistani who holds a valid national tax number deriving income chargeable to tax shall be entitled to a tax credit for a tax year in respect of any contribution or premium paid in the year by the person in approved pension fund under the voluntary pension system, Rules 2005. Example, Mizan Tahaffuz Pension Fund, Takaful Fund. Tax credit shall be computed according to a formula. Amount of tax assessed before allowance of any tax credit divided by a person's taxable income multiplied by the total contribution or premium paid by the person in the year or 20% of the person's taxable income for the relevant tax year. Senior citizen. A taxpayer is entitled to 50% reduction in tax liability subject to the following conditions. Number 1. The age of the individual should be 60 years or more on the first day of the tax year. This means that for the tax year 2016, which corresponds to 12 months period of July 1, 2015 to June 30, 2016, the age as on July 1, 2015 should be of 60 years or more. Number 2. And the taxable income should not exceed 10,000 rupees. Retirement or termination benefits of an employee. The retirement or termination benefits received in lump sum, being covered under the definition of salary, are chargeable to tax in the tax year in which received. As a result, the income tax payable substantially increases, since the taxable income falls in a higher tax slab. The taxpayer has an option to notify the concerned commissioner by the due date for furnishing the return that he/she has elected for the retirement or termination benefit to be taxed as a separate block of income at the average rate of 3 preceding years. Following example will illustrate the facts and calculations. Let's suppose your salary for the year, excluding RTB, retirement or termination benefit, is 10,000 rupees and retirement or termination benefit is 50,000 rupees. In this chart, as you see, there are 3 preceding taxable incomes along with their respective tax payables. Firstly, you have to sum them and as per average tax rate formula, divide total tax payable with total taxable income and then multiply it with your RTB. Here you see calculation of income tax. If you are not elected for average tax rate, it's around 1.1 million. On the other side, if you are elected, it's almost reduced to half, 4,100,000 rupees. Foreign source salary of resident individual. Any foreign source salary received by a resident individual shall be exempt from the tax if the individual has paid foreign income tax in respect of the salary. Foreign tax credit, where the taxpayer has paid foreign income tax, shall be allowed a tax credit of an amount equal to the lesser of the foreign income tax paid or the Pakistan tax payable in respect of the income. Active taxpayer entertain relief in tax rates at several forums. Let's have a look. Tax rate on cash withdrawal from bank for filer is 0.3%, but sadly for non-filer is 0.6%. Token tax on motor vehicle for filer is 1,500 and for non-filer is 4,000. Similarly, tax on purchase of motor vehicle for filer is 30,000 and for non-filer is 40,000. Tax on transfer of registration of motor vehicle for filer is 7,500 and for non-filer is 25,000. Tax rate on purchase of immovable property for filer is 1% and for non-filer it's double 2%. Tax rate on sale of immovable property is 0.5% and for non-filer is 1%. Tax rate on dividend for a filer is 12.5% and for non-filer is 17.5%. Tax rate on profit on debt for filer is 10% and for non-filer is 17.5%. Tax rate on payments to non-residents for filer is 7.5% and for non-filer is 10%. Moving on to question number 4. How I get a refund. A taxpayer who has paid tax in excess of the amount which the taxpayer is probably chargeable under this ordinance may apply to the Commissioner for a refund of the excess. The Commissioner shall, within 60 days of a receipt of a refund application, serve on the person applying for the refund an order in writing of the decision after providing the taxpayer an opportunity of being heard. Additional payments for delayed refunds, where a refund due to a taxpayer is not paid within 3 months of the date on which it becomes due, the Commissioner shall pay to the taxpayer a further amount by way of compensation at the rate of 0.5% per annum of the amount of the refund computed for the period commencing at the end of the 3-month period and ending on the date on which it was paid. Adjustment of tax liability of salaried taxpayers by employers being withholding agents. Every employer, while deducting income tax payable on the income tax chargeable under the head salary of its employees, is allowed under the provision of Section 149 of the Income Tax Ordinance 2001 to make such adjustment, as may be necessary for any excess deduction, adjustment of the income tax payments, or deficiency arising out of any previous deduction or failure to make deduction during the tax year. The employer shall obtain the evidence of payment of the aforesaid tax by the employee before allowing adjustment for such payments claimed by the employee. The evidence shall be retained by the employee for production before the tax authorities when required by them. Note: you can download IT3 form declaration by salaried persons through following link. Moving on to question number 5. I received an FBI notice. Now what? Getting an FBI notice is not always a bad thing. In fact, certain notices are for your benefit. So here are a few things to keep in mind if you received an FBI notice. Number 1. Before the panic sets in, read your notice. Some basic reasons are you have not filed tax return or your return selected an audit through computer balloting. Number 2. Gather necessary information and documents. Number 3. Respond to the notice in time or apply for extension in time. Number 4. If you don't feel comfortable responding to the notice, hire tax representative for it. Last question. How FBR tracks non-filers. The FBR may be large and sometimes slow, but the agency has one thing on its side: information. An incredible amount of information is fed into FBR computers every year, and there's a good chance some of that information concerns you. Example: each month your employee send a statement under Section 165 includes your information. In addition, banks, investment companies, and businesses send different forms to FBR to report various type of income you receive throughout the year. Example: if you sell real estate, the FBR received a respective information showing how much you receive from the sale. It may take FBR some time to match your information, but eventually they will. So it's better to file a tax return. We hope that you found it informative. For any suggestion and queries, write us at services@klapakistan.com. Thank you.